All right, what's up, Tycoon? Super excited for today's video. We're looking at ticker symbol VRM. This is vroom.com, and there's a lot of hype and a lot of word going around that we possibly could have a short squeeze coming. Okay, so I'm gonna break down some key levels for you, and we're gonna go strictly off some technical analysis and look at a bunch of data. So make sure you watch all the way to the end because you're not gonna want to miss it. Okay, we're gonna break down some key price levels. And I also do viewer requests every single week. Okay. So if you have any requests for a stock you want to see in the next video, let me know in the comments below. So starting this off, we're looking at the volume profile on the weekly chart, taking a look at the past 3 years of price action. Okay. That's what this is right here. This is our volume profile. And what happens is we tend to see the price in stocks move from high volume node to high volume node. All right. Now, the reason we're going to pay attention to this is because these are our two highest volume nodes. Okay. Right between 316 and 214. And right here at $1.32 down to 44 cents. All right. So those are our really, really key critical areas. Okay. We can look at the past 3 years of data and we see that these two nodes are, in fact, our highest volume nodes. Okay. The volume by price, okay, the volume in these price ranges much exceeds the volume anywhere up above, right? So what we're going to do is we're going to break that down and use this info. Now that we know, basically above 230, okay, that's the really important price level that you guys want to pay attention to. 230, okay, about 220 to 230 is where our next high volume node is. Okay, so if this strategy and this technical analysis is to play out, what we're going to see happen is we're going to see the price in the stock move from this area here up to this area here in the 2.3, right? So that's the first thing that I'm looking at on the technical analysis wise on the weekly chart. And also we have our middle Bollinger Band right here. Okay, so if you notice, our middle Bollinger Band and our volume node are kind of aligning up to the same price levels, right? And what you see is you tend to see stocks try to move from the bottom of the Bollinger Band as they are here, right, towards the bottom. They try to eventually move back up towards the middle, right? So you see we've been coming down and it's starting to make some progress up to the middle. So I'm really watching it to see, are we going to move from this high volume node area all the way back up to here or not, right? Now, one thing that's super, super interesting, and I think the most important thing to pay attention to right now that's really got my attention is there's some really unusual options activity, okay? So as you can see, I do have a couple positions open. If we look at the July 15th expiration date, okay, we can see that the two strike, all right, there is over 50,000, 54,000, almost 55,000 open interest on these call options, right? Now, what this is meaning is that there's about 55,000 people or contracts, right, in place betting essentially that the stock price is going to be above $2 by July 15th of 2022, right? We're approaching July right now. The Friday in this market is going to be July 1st. All right. So it's very, very interesting. Okay. We're only at $1.35 right now. So this stock would need to go up 70 cents, to put these contracts in the money at $2. And that's a dramatic price increase, right? That's over 50% of the current price that it's at right now. So someone or a lot of people are making a huge bullish bet that we're going to be above $2 before July 15th. Otherwise, these contracts are going to expire worthless, right? And we can go even further and take a look at the August 19th contracts, right? And we're looking at the open interest again, and it's at 53,763. Okay, betting that the price is going to go at 2.5 before the expiration date of August 19th, 2022, right? So what does this give us? What does this tell us? Well, there's about 52 days at the time of this recording until August 19th. So somewhere, someone, right, whether it's institutional money, a hedge fund money, or it could just be a whale, right? And, a large retail trader, throwing in a couple $100,000, right? Because essentially what this is 50,000 contracts, right? And these are about 10 to 15 bucks a piece. So, you do some simple math on that, and that would be about $500,000 if they got in at 10 bucks a piece, right? Now that price would increase, depending on what price that these contracts were purchased at. But you can look and see that someone's making a $500,000 bet, here on the 2.5 expiration dates, and then for August, and then the 2 strike expiration date in July. We can see that, if they got in again, if they got into these are at around $10 a piece, okay, that's about a $500,000 bet, $500,000 bet on this stock. All right, so some really, really interesting data here, right? Because we're looking at the rest of these, the open interest for these contracts, and none of them are even at 10,000. So, that's definitely some unusual options activity that we've been having going on in VRM. We're going to go back to the chart, and we just broke down the weekly chart, high volume nodes. Let's go down to the daily chart now, and there's some interesting things I want to show you on the daily chart as well. I'll pull up my daily gap drawings, and what we're going to be looking at here, okay, is going to be a huge daily gap up, right? That's going to be this blue box right here, this very bright blue box. If you notice on the chart, we have a gap, okay, from this candlestick to this candlestick, and these gaps in the charts, they fill 90 to 95% of the time historically in the stock market, right? Now, it's a little bit harder for small cap stocks to fill these gaps, especially in a bear market, right? Because they're the ones who tend to see the most pain and the most punishment, in a bear market. But we are squeezing very hard. If we look at our Bollinger Bands right here, okay, we can see that the way the Bollinger Bands work is they pop, okay? So you can see the big pop here, all right? That's what this is. There's a huge range in our Bollinger Bands, and then we squeeze, okay? We start squeezing, and that's what's happening now. And once you see them squeezing, you're going to look for another breakout, and you're going to look to see the Bollinger Bands pop open like they did here, okay? So we are in the middle of a squeeze right now. We tried to break out, but we did face some resistance. Okay, so we're going to zoom in a little bit more now and look at the Fibonacci levels. Okay, so essentially this is going to give us some critical support and resistance levels, and I'm going to help you guys understand those a little bit more. Okay, so again, looking at the daily chart, we're going to take our swing lows up to our swing highs, swing lows of $1.03 up to the swing highs right here, right around $1.81. Okay, and this golden box right here, right, this yellow box, this is what's known as your golden pocket on the Fibonacci's. Okay, and so essentially we're looking to see if we're going to find some support in between these areas here. And today we did have a massive sell-off, okay, but I mean, we can look at my watch list today and look, the entire market overall was red. There was like 3 stocks on my watch list that was green. Everything else was red today. It was a complete bloodbath. Affirm down 9%, DocuSign down 7%, GWH down 7%, Gamble, LiDAR down 11%, Laser, Jumia, everything across the market is red today, right? So, you don't have to feel like VRM is the only stock that was red today. It was definitely not a risk on trading day in the stock market. Okay. But the very good thing that we wanted to see was we wanted to see it find some support at one of these 3 support levels, right? We have that support level here at $1.51, $1.42, and $1.33. We came and found support at that $1.33 range. So now what we're going to look to see, or do we consolidate and trade up and down in this area here, okay? Or do we break lower? Because if we break lower, we're going to have this 1.2 support level as immediate support, and below that, it's going to head back down to $1.03. Okay, but once we break out of this range, we're going to head back up here and start to face some of that major resistance. Okay, we have a major resistance level at $1.62, and we can look here 1, 2, 3 days. We had some very strong resistance there. Okay, and then we also have a nice resistance at $1.80, $1.81, that range right in there. We have also, again, faced resistance there. Okay, so that's what I'm looking at. Those are my key main levels. We'll zoom in a little bit more, okay, just so we can go to some of the most recent price action, on the chart, and take a little bit of a better look. And the main thing that I want to break down to you guys, I'll take some of these studies off real quick, just so it's a very nice and clear chart for you guys, right, with just the candlesticks, is, this is kind of, in a sense, our little bit of a consolidation zone, right? We see that we have the massive rally up, okay? We come back down, we find some support here at this level here, $1.38, and then we find some support today at $1.32. All right, these are previous support levels on the chart, from the history, right? So if we look, here's our highs here, and we found some support there today. Okay, and then we also have, whoops, I didn't mean to do that. We also have another support level right over here, okay, at $1.21. So those are the main support and resistance levels that I'm looking at for re-entries on this. Because again, I went over that options volume data, and this play is so cheap, right? It's not financial advice. I'm not telling any of you guys to buy this, but me personally, the option contracts are so cheap. It's like 10, 15, 20 bucks a piece. I'm definitely grabbing these right now while this thing is very cheap, because I'm looking at that unusual option chain data, and again, look guys, 55,000 contracts almost, open interest expiring in July 15th, betting that it's going to go up to $2. And we look at the August, 53,000, almost 54,000, betting that it's going to go up to 2.5 before August 19th. I mean, just look at the rest of the option day contracts. Open interest for October, everything's like 1,000. The highest one's 5,000, right? We look at January, we have 3,000, 1,000. There's a 13,000 open interest and a 16,000 open interest on like $15 and 7.5. If you look at those, I mean, those are only like $5 a piece right now, right? So someone could come in with like 50 grand, okay, and buy 10,000 of those, and it's a very cheap position for someone to, like, let's say they have like $1 million short, they put 50 grand going long in some like super cheap option contracts. They could possibly double their money. All the thing has to go is from $5 a piece to $10 a piece. That's not too hard with options. If you have a little bit of some bullish activity, and they can make 50 grand off of that. And if they lost 50 grand on their short position, right, then they can put those profits in from the call options back into shorting the stock, right? So there's lots of ways for these things to play out. But that's the most important thing that I'm really looking at. Is I'm looking and I'm seeing that we had this huge increase in open interest in August and July specifically. And this is hinting towards me, right, that we may be able to see a bullish pop. We may see a pop up to $2 or $2.50, either by July 15th, right, or August 19th. But again, it's super risky. Okay. There's nothing fundamental about this play. I'm not doing it because of the PE ratio or anything like that. Strictly just some technical analysis and reading the unusual options chain activity, as long as with some technical analysis from the price action, right? Once we do break out from this $1.81 level, we're looking at the fibs right now, and we'll have a nice breakout up to, we have a level up to 193, 208, and then 251. Now, why is this really important? Why is that the price levels that I have shown up? Well, because the Fibonacci's are an algorithm, right? It's a math equation to tell you, where the price wants to go once it gets to certain levels. All right. So once we get above this certain level, we can see that the price is naturally going to want to go to $1.93, $2.08, and then $2.51, which, looking at our options chain data, right, the two strike contracts would be what's known as in the money, right? And that would bring the value of these contracts up a lot, right? It may bring them to $50, it may bring them to $100. If they're only worth $10 a piece right now, that's a 5x or a possible 10x on your money. All right. And again, we look here, 251 on the Fibonacci's. All right. We go back again to this August, and we can look that the 2.5 option contracts have 53,000 open interest. So, I'm saying that, okay, well, someone is making a bet that this is going to happen. I'm using technical analysis, and I'm using the Fibonacci's and seeing that this is an area where the price wants to go. All right, so we broke it down from the weekly chart. We looked at the volume nodes. We looked at the daily chart, right? And we looked at the daily gaps. We looked at the Bollinger Bands, and now we're at a 1 hour chart. Okay. And we're looking at some smaller time frames. All right. At the breakout levels, if once we do make new all-time highs, not all-time highs, but new highs on this short-term uptrend. All right. Once we get past that 1.81 level, 193, 208, and 251 are going to be our bullish price targets. And this is just another word for resistance as well. Okay. I'm not a fortune teller. I don't know if it's actually going to go above $2 or above 2.05, right? So you always have to have a game plan where, okay, I'm going to take some profits here at $1.93. I'm going to take some profits here around 208. And if possible, I'll take profits up here at 251, using your own form of risk management in case things do pull back. Okay. Because again, today was a very red day, down 16% on ticker symbol VRM. But we look at the stock market as a whole and just scroll over here on this watch list. You can see everything is very, very red today. Okay. So, don't be afraid. You're not alone. Pretty much everybody had a red day in the stock market unless you were shorting something. And, you know, I'm really looking to see what's going to happen. I think that this data right here is just very interesting. You can't really ignore the numbers. I'm not going to ignore them. I'm going to pay attention to them, and I'm risking what I'm willing to lose. Okay, if I lose everything that I bet on ticker symbol VRM, it's not going to hurt me, and that's the way that I think you guys should trade. Right? Is don't ever buy or take any positions where you're not willing to lose all of the money. I don't need that money if it disappears. But if something nice happens, right, and we do go above $2 to 250, then that small position will turn into a nice big position, right? Possibly 5x to 10x. All right. So thank you guys for watching. Hope you liked the video. Don't forget to like, comment, subscribe, and let me know what stock you want to see in the next video.